the chief economist for India and Asia, except Japan, at Nomura. Thank you so much for joining us today. There's so much to talk about. But first up, the big problem that could be for India is, of course, crude oil prices. There's already conversation about how in the next couple of days, we could see a triple-digit level when it comes to crude oil prices. It could go to 100, beyond 100. That's just going to throw the fiscal math out of the equation when it comes to India.
Yeah, hi, morning. So, yeah, this is actually going to be quite tricky for the government. Whether this throws the fiscal math, out of order it really depends on whether the government decides to shield the consumer. As we know, since November, fuel prices have not been adjusted yet. So, some sort of an adjustment is likely after the state elections in March. Our sense is the government may not immediately cut excise duty, given they just announced a cut in November. We're yet to actually even start on FY23. So there are still a lot of uncertainties, and a reduction in excise duty, while it will protect consumers, will also mean some compromise the government will have to do potentially on their capex plans, which is again something they may not want to do right now. So yes, it is a risk to the fiscal math, but at this stage, our view is potentially the consumer will have to bear some of the burden.
Okay, so let's see what happens post 10th of March. Then, of course, the expectation is consumers could remain unimpacted. We've not seen a price hike, while it is, of course, freed up because of the state elections. That is, of course, the conversation that has been taking place. Now, Sonal, the other flashpoint, it could be a double whammy of sorts, which is that you've got crude on the boil and what's happening on Mint Street.
Yeah, that's right. So I think, first of all, there is a lot of uncertainty just in terms of the overall geopolitical situation, and the combination of higher energy prices plus tightening financial conditions is sort of a stagflationary shock for a net commodity importer like India. So it does sort of make the trade-off between growth and inflation even harder to manage. Now, we did get a surprise dovish hold from the RBI at the February meeting, and the bigger surprise actually was the RBI's inflation projection, where they see inflation averaging 4.5% in FY23. Our own view is there are lots of pipeline price pressures. Oil price, of course, is one of them, which is going to move up. But there are clearly spillovers of oil onto a lot of other broader commodities in terms of, and other sectors in terms of higher gas prices, transportation costs going up. There's been an increase in commodity prices even outside of oil. So a lot of input costs push inflationary pressures. And India is also seeing a pretty smart rebound from the third wave. So the services reopening is also going to put an upside pressure on inflation. So while we've got sort of a dovish hold from the RBI, from our standpoint, risks to the inflation outlook are to the upside. And therefore, the ability to hold on to the accommodative stance for very long will come under challenge.
Government, or rather the RBI, will have to move away from its growth focus to try and battle inflation. And we actually see a rate hike come in.
So it is, like I said, a pretty challenging situation. At the end of the day, the question is to what extent easy monetary policy is helping growth on a durable basis. The big risk for India, of course, is that continued tolerance of high inflation leads to expectations also moving higher. And one thing we have seen even prior to the third wave is demand in the mass consumption segment actually weakening, which partly is because of less savings and weaker income growth. but it's also because of the inflationary pressures. So if inflation, continues to move up and becomes more entrenched, then there will be also a negative impact on real consumer incomes. It can impact corporate profitability as well. So it's a fine balance, and at the margin, the role for monetary policy actually is lesser, primarily because the concerns around inflation are rising.
Sure, they are. Sonal Varma, great to have you on the show today and take time out to discuss what happens if crude does inch up higher, and it seems like it could be very well headed that way. Still a very much fluid situation when it comes to geopolitics today. For instance, it's having a bearing across asset classes. While the markets on a headline basis, the index that is, may have actually rebounded somewhat from the session lows, but we're not nowhere close to out of the woods. We're still down 270 points and the breath still continues to bleed. Saurabh Mukherjee